Let me tell you about a conversation I had last tax season that changed how I think about this entire business. I was on a planning call with a client, a course creator doing really well, revenue growing fast. And about 10 minutes in, she stopped me and said, Aaron, I don't need another strategy. I need someone to tell me what to actually do with the money that's sitting in my account right now. That stopped me cold because I'd been preparing to walk her through a few optimization ideas, but what she actually needed was so much simpler and so much more valuable than that. Hey, friends, welcome to the Thrive Advisor podcast, where we help tax advisory firm owners build practices that are sustainable and profitable. I'm your host, Aaron Siegel. Today, we're talking about something that I think gets overlooked in this industry more than almost anything else: what your clients actually need from you. Not the strategies, not the fancy structures, not the shiny tax savings number you can put on a slide deck, the real, practical, everyday value that makes someone say, I could not run my business without my tax advisor. If you've ever felt like you need to learn one more strategy before you're ready to charge what you're worth, this episode is going to reframe everything. Let's get into it. So here's what I see happening all the time. An advisor joins a mastermind, they'll learn 100 tax strategies, and then go looking for clients to apply them to. They lead discovery calls with strategy. They lead proposals with estimated savings. They position themselves as the person who's going to find all the hidden money. And sometimes that works. But more often than not, it creates a dynamic where you're constantly trying to justify your existence through the next clever play. And when you run out of plays, or when the client doesn't qualify for the strategies you feel like you've got nothing to offer. I've been there. Early in my practice, I thought the value I brought was knowing things that other advisors didn't know. I thought if I could just learn enough strategies, I'd be unstoppable. But the clients who hired me for strategies were the hardest to keep, because strategy is a one-time event. Once you've implemented it, what's next? The client starts wondering why they're still paying you every month. The advisors who build lasting, profitable relationships aren't doing it through strategy alone. They're doing it through something much more fundamental. They're helping people make better decisions with their money on an ongoing basis. And here's the thing that nobody in the mastermind world wants to admit: most small business owners don't need complex strategies. They need maybe a dozen things that matter for their specific situation, executed well and consistently. An S Corp election at the right time, proper retirement contributions, clean separation of personal and business expenses, accurate quarterly estimates. These aren't sexy. They don't make good social media posts, but they're what actually move the needle for a business doing 300,000 to a million in revenue. The obsession with strategies creates a weird incentive where advisors feel like they need to find problems to solve even when the client's situation is straightforward. And clients pick up on that. They're wondering if you're recommending things because it's genuinely good for them, or because you need to justify your fee. When I really started listening to what my clients were asking for, I realized it wasn't what I'd been trained to deliver. Nobody was calling me and saying, Hey, Aaron, I'd love to explore the tax implications of a cost segregation study on my rental property. That's what we want them to say because that's what we've been taught to sell. What they were actually saying was more like, I've had a great month, but I have no idea where the money went. Or I'm thinking about hiring someone, but I don't know if I can afford it. Or my partner wants to buy new stuff and I don't know if now is the right time. Or the classic, how much should I be setting aside for taxes because I have no idea? These aren't strategy questions, these are decision questions. And the gap between what we're trained to sell and what clients actually need is where most advisors lose the plot. Think about it from your client's perspective. They're running a business. They're making dozens of financial decisions every week. Most of them aren't big enough to require a strategy, but they're big enough to matter. Should I take this contract? Can I afford to raise my prices? Should I pay myself more this quarter? Do I need to put money aside before I spend it on that new piece of equipment? What they need is someone who knows their numbers well enough to help them think through those decisions in real time. That's advisory, not a binder full of strategies, a person who understands their business and can help them navigate. If I had to pick the single most valuable thing I do for clients, it's the cash flow conversation. And I know that sounds boring compared to a fancy tax strategy, but let me explain why it matters more than almost anything else. Most small business owners have no idea how their cash flow actually works. They look at their bank balance, they think that's how they're doing. The revenue goes up, they feel rich. Revenue dips, they panic. They make spending decisions based on what's in the account today rather than what's actually committed, what's coming, and what needs to be set aside. And here's the pattern I see over and over, especially with clients who are growing. Revenue goes up 30, 40, 50%. Great. But spending goes up faster. They start buying things that feel like business expenses, but are really vanity purchases. New equipment they don't really need, nicer office, subscription and tools they'll never use. They're not budgeting for quarterly tax payments. They're not setting aside money for the strategies they say they want to implement. They're not building a reserve. Then tax time comes and it's a disaster. They owe a number that shocks them. And now they're scrambling, looking for any strategy that can reduce the bill, which is exactly when bad decisions get made. This is where I think our industry gets it backwards. We focus so much on reducing the tax bill that we forget to help people have the money available to actually do something smart with it. The tax code incentivizes specific behaviors, right? Retirement contributions, equipment investment, real estate, hiring, research. But every single one of those requires cash. If your client has already spent the cash on things that don't matter, there is nothing left to deploy into strategies that do. I know another advisor who works with content creators. Sharp advisor, knows her stuff. But the challenge she kept running into was that her clients would blow through their income on lifestyle spending and then be shocked by their tax bill. She'd recommend strategies they wouldn't implement because the money was already gone. And then she'd end up helping clean up the mess with payment plans and penalty abatement requests. Here's the thing. That's not advisory. That's triage. The fix isn't more strategies. The fix is getting upstream of the spending. And that's where the real advisory value lives. Helping clients understand their cash flow, set aside money before they spend it, and then have capital available when it's time to make smart moves. Here's what that looks like practically. When I onboard a new client, one of the first things we do is set up what I call a cash flow rhythm. It's not complicated. We look at their average monthly revenue, we identify their fixed costs, we set a target for owner pay, we calculate their estimated tax obligation, and we carve out a savings allocation for strategy deployment. That last piece is the one everyone skips. If you don't set aside money specifically for things like retirement contributions or equipment purchases, it will get absorbed into operations or lifestyle spending every single time. But once that rhythm's in place, my quarterly conversations change completely. Instead of scrambling to find ways to reduce a tax bill that's already baked in, I'm looking at a client who has cash set aside and asking, okay, we've got $15,000 earmarked. Here are your options for how to deploy it. And here's what each one does for you. That's a completely different conversation. That's advisory. Now, this is going to sound strange coming from a tax advisor, but I think it needs to be said. Sometimes paying your tax bill is not the worst thing in the world. Alex Hormozy did an entire episode about this that I thought was brilliant. The basic idea is that paying taxes means you made money. And while nobody loves writing that check, the alternative is often worse. People make terrible financial decisions trying to avoid a tax bill. They buy things they don't need. They commit cash to investments they don't understand. They lock up liquidity in structures that sound clever, but don't actually serve their goals. I've had clients that were so fixated on getting their tax bill to zero that they would spend $2 to save $1 in taxes. That's not optimization. That is panic. You have to play the game the government wants you to play. The tax code is designed to incentivize specific behaviors, save for retirement, invest in your business, create jobs, fund research. If your client is willing to do those things, great. There are real benefits. But if they're not willing or not able, then the honest answer is you're going to owe some taxes, and that's okay. Part of being a great advisor is being willing to say that. Not every client needs a strategy. Some clients just need clean books, accurate projections, and someone who tells them the truth about their numbers. That is not a failure of your expertise. That is the expertise. And here's what I found. The clients who respect that honesty are the ones who will stay forever. They trust you because you're not trying to sell them something. You're trying to help them make a good decision even when the good decision is boring. Some clients will reject every suggestion you make. They'll complain about their tax bill while refusing to do anything about it. That happens. You can't force someone to implement, but you can make sure they understand the trade-off they're making. And when they finally come around, you'll be the advisor they trust because you were straight with them all along. Here's something that doesn't get talked about enough. When you niche down and you work with the same type of client over and over again, you start seeing patterns that no one else can see. You start noticing that when a course creator's revenue crosses a certain threshold, they almost always need to restructure their entity. You notice that content creators who start hiring contractors tend to forget about the 1099 reporting until it's a problem. You see the same cash flow mistakes repeating across your entire client base. Those patterns become incredibly valuable, not because they lead to a strategy sale, but because they let you be proactive. You can reach out to a client before they hit the wall because you've seen 5 other clients hit the same wall at the same stage. That's the kind of advisory that makes clients feel like you're reading their mind. And it only comes from depth. You can't see patterns when every client is a different type of business in a different industry with different challenges. You see patterns when you've done the same type of work 50 times for the same type of person. And that's why niche selection isn't just a marketing decision, it's a service delivery decision. The tighter your niche, the better your pattern recognition, and the more valuable your advisory becomes. We've talked about this in earlier episodes from a positioning standpoint, but I want you to hear it from the delivery side. Your niche makes you a better advisor, not just a better marketer. So, what does this actually look like in practice? Let me walk you through how I structure a planning conversation, because I think of a lot of advisors who know they should be doing advisory, but they're not sure what it looks like when they actually sit down with the client. First, I'm not winging it. Before every planning meeting, I'm reviewing 3 things: the client's current financials compared to the last quarter, any open action items from our last conversation, and what's coming up in their business or their industry that might affect them. That prep takes me maybe 15 to 20 minutes. And it's the difference between a reactive call and a proactive one. The conversation itself follows a simple structure. I start with the numbers. Here's where you are. Here's where it compares to where you were. Here's what's trending up or down. And I keep it short because the numbers are the foundation. They're not the main event. Then we move to decisions. So based on what I'm seeing, here are the 1 or 2 things I think we should talk about. Maybe it's adjusting the owner's draws because revenue's up or down. Maybe it's front loading retirement contributions because Q1 was strong. Maybe it's just confirming that they're on track and there's nothing to change right now. Not every meeting needs an action item. Sometimes the most valuable thing you can say is, "You're doing great. Stay the course." Then I ask what's on their mind. What decisions are you facing? What's keeping you up at night? This is where the real advisory happens, because they'll bring up things you'd never have thought to ask about: a potential partnership, a big purchase they're considering, an employee situation. Your job isn't to have all the answers. It's for you to help them think through things clearly, using the financial context you already have. And then we close with next steps. So here's what we're going to do. Here's what you're going to do. Here's when we'll check back in. I send a short summary after the call, so there's a paper trail and accountability. The whole meeting takes 30 to 45 minutes. It's not complicated, but it is consistent. And that consistency is what builds the kind of trust where clients stop shopping you and start referring you. Now, here's something I want to flag, because I think there are a lot of advisors avoiding planning meetings because they're afraid of not having all the answers. You don't need to have every answer on the spot. What you need is to be honest about what you know and what you need to research. "That's a great question. Let me run the numbers and get back to you by Thursday" is a perfectly good response. It's infinitely better than making something up or avoiding the conversation entirely. The clients who value advisory aren't testing you. They're not sitting there trying to catch you in a mistake. They want a thought partner, someone who will sit down in the uncertainty with them and help them work through it. That's a skill, and it's one you build through reps, not by memorizing more strategies. And one more thing on the structure: and keep notes from every planning meeting in a simple format. Date, what we discussed, what we decided, what's next. When I prep for the next meeting, those notes are gold. I can say, last quarter we talked about hiring a VA, and if you were going to test it for 90 days, how did that go? That continuity is what makes clients feel known. It's what makes them feel like you actually care about their business, because you do. Here's your Thrive takeaway from this episode: your clients don't need 100 strategies. They need someone who understands their numbers, helps them make better decisions, and tells them the truth, even when the truth isn't exciting. The most valuable thing you can do as an advisor is get upstream of their problems. Help clients manage their cash flow before they've spent it. Help them set aside money for taxes and strategies before there's nothing left. Help them see the patterns in their business before those patterns become crises. Here's what I want you to do this week: pick one client and go back through your last 3 conversations with them. Were you talking about strategies or were you talking about decisions? Were you trying to sell them something or were you trying to help them think clearly? If the answer is mostly strategies and selling, that's okay. Awareness is the starting point. Then, before your next planning meeting with any client, spend 15 minutes on prep. Pull their financials, look at what changed since last time, think about what's coming up for them, but walk into that meeting ready to say, here's what I'm seeing and here's what I think we should talk about. That one shift will change the entire energy of the conversation. This is work that AI can't replace. A language model can categorize transactions and draft a tax return. It cannot sit across from a business owner who's scared about making payroll next month and help them see the path forward. That's your value. That's what's worth protecting. And that's what clients will pay for year after year after year. If you want to build the systems and the confidence to deliver this kind of advisory, that's exactly what we work on inside the Thrive Advisor Collective. It's where advisors who care about doing this work well come to build practices that actually deliver on the promise. The link is in the show notes. But that's it for today, friends. If this episode shifted how you think about the value you bring to your clients, share it with another advisor who's been chasing strategies and needs permission to just help people make better decisions. You've been listening to the Thrive Advisor podcast. Work smarter, serve better, thrive always. We'll see you next time.